Are you looking to explore one of the largest and most volatile stock markets in the world? The China stock market has attracted global attention, and today we're going to break down what's happening right now, the trends you need to watch, and how to potentially capitalize on this massive economy. Whether you're an investor or just curious, understanding China's stock market can provide crucial insights into the future of global finance. Stay with us as we explore this exciting topic. China's stock market has been on a roller coaster ride for years, but it remains one of the most important financial markets in the world. With its rapid economic growth, a massive consumer base, and increasing influence globally, understanding the China stock market is key for any investor interested in emerging markets. Today, we're diving into what's currently happening in China's stock market, the top stocks to watch, and the risks and rewards involved in trading here. Let's start by understanding the two major stock exchanges in China, the Shanghai Stock Exchange SSE and the Shenzhen Stock Exchange SCSE. These are the two largest stock exchanges, and they host the majority of Chinese companies. The SSE is known for its large state-owned enterprises, while the SCSE tends to have more small and medium-sized tech-focused companies. Additionally, there's the Hong Kong Stock Exchange, which also plays a vital role in connecting international investors with Chinese companies. When it comes to China, government policy plays a huge role in the stock market. The Chinese government has a heavy hand in regulating industries, making policies that can significantly affect stock prices. For instance, recent crackdowns on tech companies like Alibaba and Tencent have created volatility, while support for green energy companies has fueled growth in that sector. Understanding the role of government intervention is essential for predicting stock trends in China. China's economy has grown at an impressive rate over the past few decades, and the stock market has mirrored that growth. However, the rapid expansion also comes with challenges, such as slowing growth rates, trade tensions, and internal debt issues. These factors influence the stock market stability. For investors, it's crucial to stay up to date on China's economic indicators, such as GDP growth, inflation, and unemployment rates, as they directly affect market performance. Technology. China is home to some of the world's biggest tech giants, and the tech sector is a major driving force in the stock market. Companies like Alibaba, Baidu, and Tencent have been at the forefront of this movement. However, the government has placed increasing scrutiny on the sector, causing volatility. Still, tech remains one of the hottest sectors in the market, with huge potential for growth. Green energy. With China pushing toward carbon neutrality, green energy has become a booming sector.